What's up guys, welcome to the door number 8 of the finance calendar, where we dive into 24 financial ratios in 24 days. Don't forget to subscribe so you don't miss any of the ratios, and let's go! Today we are going to talk about return on investment, ROI. It is one of the more popular metrics used to check how well your investments have been doing. It is calculated simply by dividing the net profits of the investment by the cost of the investment. Let's take a look at a couple of examples. Let's say that you bought one Bitcoin 7th of December 2020 when the price was $15,800. If you sell the Bitcoin 7th of December 2021, you will receive $45,300. The net profits for this investment are $29,400 and the cost of the investment was $15,800. This means that the return on investment is 185.8%. If there were any transaction costs, remember to subtract them from the net profits and add them to the cost of the investment. You might want to annualize the profits for better comparison. Let's say that you invested in Tesla on the 7th of December 2015 when one stock was $46. If you sell that one stock on the 7th of December 2021, you will receive $1,048. The return on investment would be 2,179%, but you can't really compare this with Bitcoin's returns since you invested in Bitcoin for 1 year and in Tesla for 6 years. So you want to annualize the Tesla returns by using the following formula. N is the number of years, in this case 6. The ROI is the return on investment over the time period, in this case 2,179%. When you enter these numbers into the formula, you get annualized return on investment, which is 68.38%. Now you can more easily compare these returns with Bitcoin's returns. So as you can see, you can use ROI to see which investments are better. You can also use ROI to know whether or not you should invest at all. If the return on investment is negative, it means that you are losing money and you shouldn't invest at all. If the return on investment is positive, you are making money. A good return on investment is usually thought to be around 7 to 8%, which is also the average annual return for S&P 500. You can also use return on investment to eliminate investing options. Let's say that you are interested in 3 different investments, A, B and C. As you can see, the investment B has a very low return on investment, so you can eliminate it and focus more on investments A and C. But as always, don't make your decision based on one ratio, use all the available information. That's it for today's financial ratio. Hit the like button if you found this video helpful and subscribe so you don't miss the future ratios. Have a great day and I'll see you tomorrow. Bye!